Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PC Accountancy online classes. Students, in the previous class we have started a new chapter, that is cash flow statement, right? Now in today's class I will continue, that is the items that are coming under each of the activities, that is financing, operating and investing activities. Let us bifurcate. I will prepare a chart here. You just note down and write it in your notebook. Okay. So first I will take up operating activities. In between I will take up this operating activities. If you have this chart and if you study this properly, you will come to know which item should be placed under which activity. Remember this. Operating activities: proceeds from sale of goods and services to customers. Make this as yes, do like this and take an arrow mark here. Proceeds from sale of goods and services to customers. Proceeds from sale of goods, and services to customers, and services to customers. Services to customers. Then other one is receipt from royalties, receipts from royalties, 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 comma fees, commission, fees, comma commission, and other revenues, right? That's all operating activities. There are two parts. This is inflow, cash inflow, right here, cash inflow. Then this is cash outflow, Now operating activities, cash outflow, it is right. Payment of employee benefit expenses, payment of employee benefit expenses, Then second one is purchase of inventory from suppliers, purchase of inventory from suppliers, then third one, these are all outflows. Remember, pay operating expenses, payment of operating expenses, then last one is payment of taxes. payment of taxes. Taxes, right? Yes, that's all. Now, moving on to the next activity, that is investing activity. Investing activity. Investing activity. Here, yes, let us know what are the inflow under investing activities. Sale of property, plant, equipment. Plant, equipment. Plant, equipment. Long-term investments. Investments. Then receipt from interest and dividend. Receipt from interest and dividend. Interest and dividend. Then it's all only two source of inflow. Then outflow is only one, that is a activity. Purchase of property, plant. This is sale of property, remember, this is purchase of property. Purchase of property, plant, equipment and non-current investments. Plant, equipment and non-current investments. Non-current investments. Yes, that's all. Then last one is financing activity. I'll write here. You just write below, or yes, it is better to write here. Financing activity. You just write below. Financing activity. Yes, under that inflow I will write here. Proceeds from issue of preference or equity shares. Proceeds from issue of preference or equity shares. Equity shares. Second one is proceeds from issuance of debts, bonds. Proceeds from issuance of debts, bonds. Then last one is procurement of loans. Procurement of loans. Moving on to the outflows under financing activities. Redemption of preference shares. Or redemption of preference shares. Preference shares. Then buyback of own equity shares. Buyback of own equity shares. Then next one is outflow. Redemption of debentures. Comma, and payment of, not comma, and payment of the long term debts. Payment of the long term debts. Long term debts. Next one is payment of dividends and interest. Payment of dividends and interest. That's all. Isn't it? This is the chart which gives clear information to you how to treat each item. So operating activities, you will have cash inflow from, there is a proceeds from sale of goods and services to customers. That is operating activity, day-to-day activity, isn't it? Receipts from royalties, fees, commission and other revenues. Then here outflow from operating activities, payment of employee benefit expenses. We have to pay salary, wages, all these things, other benefits to the employees. Purchase of inventory from suppliers for production, isn't it? Payment of operating expenses, that is the selling expenses, distribution expenses, administrative expenses, all this comes under this operating expenses. Then payment of taxes to the government. Then moving on to investing activity, sale of property, plant, equipment, long-term investments, isn't it? That is all these sale of these long-term, that is assets, and that is investment, long-term investments, non-current investments, that is that comes under investing activity. Then receipt from interest and dividend. Remember, receipt from interest and dividend, but this in case of financing companies, this will become operating activity. This will become receipt from interest and dividend will become operating activity. Remember, because their day-to-day work is that only, isn't it? And moving on to the last one, that's outflow, purchase of property, plant, equipment and non-current investments. That is non-current asset and non-current investments. Fixed assets and long-term investments, if we purchase, comes under investing activity. Then financing activity, proceeds from issue of preference or equity shares, isn't it? By issuing whatever shares, that is preference or equity, we collect money, that is financing activity. Proceeds from issuance of bonds, that's long-term bonds, if we issue, that the amount collected is also coming under financing activity. Then procurement of loans, that is purchase of loan, when we apply for long-term loan and when we get the money, that comes under financing activity. Moving on to the cash outflow here, redemption of preference shares, buyback of own equity shares, that is when we buy our own shares, isn't it? Buyback of shares means when we purchase, when a company purchases its own shares from the open market. Why they buy? Because they want to reduce the quantity of shares in the market so that the share price will increase. When the quantity is reduced, the market value will increase automatically, isn't it? So with some purpose behind it, they will do this buyback of own equity shares. Then here also, what happens when we buy our own shares? We have to make payment, so cash goes out, so cash outflow, isn't it? Redemption of debentures and payment of long-term debts. When we redeem the debentures already issued, after the term of the debentures, we have to redeem it, isn't it? We have to pay for them and we have to get back the debentures from the debenture holders. Then when we make payment for that also comes under financing activity. Then payment of dividends and interest, that also comes under financing activity. So this is in brief how the chart can be prepared by incorporating all the activities. If you study this chart properly, you will come to know which item should be included here under which activity, isn't it? So make sure of these things clear. Otherwise, when I take up the problems, you won't be in a position to understand, or you won't be in a position to follow me. So make sure of this chart properly. Okay. Yes. Now I'll take up problem part. Direct, indirect method, two methods I already told, but format I will solve while solving the problem itself. We will analyze because it is there as practical question also. So we'll take up one by one. Only we will solve the problems now. Okay. Yes. I'll tell you the page number. Yes, page number 137. Page number 137. Problem number 1. Problem number 1. Only 6 marks problems will be asked here. Section C, 6 marks questions it is given. There are only 9 problems, small problems rather. So we can solve 2 or 3 problems in one class, that we can wind up the syllabus, isn't it? Yes, I will read out the problem, we will analyze in the meantime, and then let us solve the problem. Anand Limited Limited arrived at a net income of rupees 5 lakh for the year ended March 31st, 2017. Depreciation for the year was rupees 2 lakh. There was a profit of rupees 50,000 on assets sold, which was transferred to statement of profit and loss. Trade receivables increased during the year rupees 40,000, and trade payables also increased by rupees 60,000. Compute the cash flow from operating activities by the indirect method, they told. Indirect method. So we have to start from profit before interest and tax. Profit before, net profit before tax and extraordinary items. Tax and extraordinary items, we have to start in that way. We have to follow the format. I will prepare in the format itself. Just go through it and just solve the problem. Okay. Now, the problem is that the profit of rupees 50,000 on assets sold, which was transferred to statement of profit and loss. Isn't it? This profit from proceeds from sale of goods and services. This is receipt of royalties, fees, commission, and other revenues. Isn't it? So, other revenues, sale of property, isn't it? Profit on sale of property. This is cash flow, cash inflow by selling the property itself, isn't it? The value received by selling the property comes under investing activity. But here we book the profit or loss part only under operating activity. Remember, we debit it to statement of profit and loss, isn't it? So that's what we are doing here. So let us solve the problem. Cash flow statement. Cash flow statement. Let me follow the format. You can write like cash flow from operating activities. Cash flow from operating activity. Let me delete this. Simple statement it is. It is not an account at all. There are no debit and credit or all these things. Nothing will be there, isn't it? JF column, all this column, that column. Those things are not there in this cash flow statement. So let us solve cash flow statement, isn't it? It is a cash flow from operating activities in direct method. Cash flow from operating activity in direct method. They will mention the problem under which method you have to solve, and you have to follow that method only. Remember this. Clear? Yes. Only 2 columns are enough here. Particulars and amount in rupees. Particulars and amount in rupees. Amount in rupees. Draw the columns, friends. Yes. Draw the column. Carry on. Yes. Let us start now. We will start from the net profit before tax and extraordinary items. Isn't it? Refer the problem. Net income of rupees 5 lakh for the year ended March 31st, 2017. That means this is the amount of profit earned, that is before tax and extraordinary items. That is what we have to assume. That's all. Isn't it? So start. Net profit before. Net profit before tax and extraordinary items. And extraordinary items. Extraordinary items. Extraordinary items. Write the amount, how much it is? 5 lakh. Am I correct? 5 lakh. 5 lakh. Then adjustment for, right? Adjustment for. Adjustment for. See friends, whenever depreciation is there, normally what we used to do? We used to deduct. Am I correct? Depreciation is to be deducted because it is an expense, non-cash expense. Am I correct? Yes. But here, as we are going by reverse calculation, we are going through reverse calculation. Am I correct? So what we have to do here? We have to add it. So normally what you are deducting should be added here. Normally whatever you are adding, that should be deducted here. That is the only rule here. That's all. Very simple rule. So depreciation always used to deduct it as an expense. So you always do it as minus. Now reverse it. That's all. Add it. Plus depreciation. Plus depreciation. Remember, you have to write the figures within bracket if it is negative figure, minus figure. No need to write minus for that. When you put the figure within bracket, that means it itself is negative figure. For positive figures, no need to write plus, and you need not have to put the brackets. If there are no brackets, means it is positive figure. Clear? So depreciation You have to add, isn't it? How much it is? Depreciation 2 lakh. 2 lakh. Write in amount column itself. 2 lakh. Then whatever you will get here, see, profit on sale of asset is there. It is an extraordinary item. Am I correct? Net profit before tax and extraordinary item. So extraordinary item is not included in 5 lakh. Here extraordinary item is profit on sale of asset. When we book profit or loss on sale of asset, then it is called extraordinary item. It is not done regularly. It will not come regularly in the business, isn't it? So it is an extraordinary item because it is casual item, comes once in, or maybe once in a year or something like that, isn't it? Not regular. It's not recurring in nature. So normally profit on sale of asset, what you used to do? Used to add it. Am I correct? Profit means we always add. Loss means we always deduct. But here profit means you have to deduct. You have to deduct, isn't it? You have to deduct. That is how much? 50,000. So minus, write here symbol you have to write here, minus profit on sale of asset, wasn't it? Yes, profit on sale of asset 50,000 on sale of asset 50,000, but here you have to write this figure within bracket because this is minus figure. Am I correct? So while adding or deducting, you have to make sure that this is minus and these are plus figures. Make sure it. Done. Whatever you are getting is nothing but, when you set off these things, whatever amount you will get, that is nothing but operating profit before working capital changes. Operating profit. Profit before working capital changes. Working capital changes. How much it is? 5 plus 2, 7, minus 50. So 6,50,000, positive figure. No need to put a bracket, right? Yes. 6,50,000. You just go from here, friends. 6,50,000 is operating profit before working capital changes, isn't it? Then add profit on sale of asset 7 lakh. Like that it will continue. Here if you deduct, here you have deducted it, you have to add back, isn't it? So that is what you have to do here. You are going back here. From here you will going back, isn't it? 6,50,000. So if you deduct this, 650, 6 lakh, isn't it? Or it's just 650 minus 50,000, then minus 2 lakh, isn't it? How much it will be? So in that way, 650 plus 50 it will become 50. So 7 lakh minus 2 lakh is equal to 5 lakh. Are you getting me? Normally we go like this, but now we are coming back. From last point to starting point we are coming. Okay? Very simple. Operating profit before working capital changes 6,50,000. Now move further. Increase in trade receivables. This is working capital changes here. Working capital changes. Working capital means current assets minus current liabilities. Here we will take up current assets and current liabilities. Am I correct? So trade receivable increased. Is it correct? Refer the problem. Trade receivables increased during the year rupees 40,000. 40,000. So increase in trade receivables. So normally we used to, increase in the value of asset, we used to add, but here we have to deduct. We should deduct it. So minus increase in trade receivables. Increase in trade receivables. Trade receivables, isn't it? Write the figure, write the amount. How much it is? 40,000. 40,000. That is minus. So put it within bracket. Isn't it? Then increase in trade payables. Next part is increase in trade payables. That is trade payables also increased by rupees 60,000, right? So trade payable being a liability, am I correct? Trade receivable is the amount that is supposed to be receivable from the debtors and bills receivable. So it is an asset. But trade payable is a liability. Decrease in the liability is a profit to us. Increase in the liability is loss to us. Am I correct? So normally what we used to do? Minus. Liability increase means it is a loss, minus. But here we have to add it. We have to add it because we are doing calculation. Correct. So increase in trade payables, add, plus increase in trade payables. Trade payables. Isn't it? How much it is? Refer the problem. 60,000. 60,000. 60,000 plus, isn't it? Yes. Whatever you will get is nothing but that is net cash from operating activities. Net cash from, therefore net cash from operating activities how much it is? That is 650 you got here, minus 40 plus 60, isn't it? So 610 plus 60, 6,70,000, is that correct? 6,50,000 minus 40,000, so 6,10,000 plus 60,000, 6,70,000. That is how you have to solve a problem on cash flow statement. This is indirect method where you are getting, that is the net cash from operating activities. So very simple, friends. For this you will get 6 marks. Simply you have to make sure the expenses that are to be deducted should be added, isn't it? Income that is supposed to be added should be deducted. That is what you have to do here. With that you will come to know what is how much is the cash flow, net cash flow from operating activities. Then there are I think 8 more problems, isn't it? Most of them are on indirect method. Some of them are in on direct method, isn't it? And then small problems are there here, and you will get almost these type of problems. They have bifurcated it into financing activities, investing activities, separate problems, because in a board exam you will not be asked with all the 3 activities, because all the 3 activities means at least 1 or 2 items must be there. So allotment of marks will be a problem, because for each of the point you will get 1 mark here. Remember, 3, 4, 5, isn't it? 6, like that. This final answer. These are the different entries you are doing. So for that, for each entry, have 1 mark. So maximum 6 entries, more than that. They will give small problems like this on either on mostly on operating activities or investing or financing activities. I will take up the other problem. Solve the same problem and submit your assignment. Submit your assignment on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.